Hello everyone, apologies for the delay. Here we are. Okay, so this is the lesson number 9 about price action for old. All questions are welcome anytime you want. Of course, this information is going to be uploaded also in our YouTube channel. And don't forget to visit the website. We have almost every day, I'm going to say 3 times a week, information of the most important data of the week. Okay, so inside these articles, of course, you're going to find the English version on the website, and you're going to see what is expected on the week. Okay, so at this point we have, of course, information from Bitcoin. What happened yesterday, that Bitcoin finally went through the highs of the area, because of course Tesla is accepting payment on Bitcoins again. Not Amazon though. That was a rumor that actually made the Bitcoin prices go up, but it's not accepted as a payment from Amazon.com. But anyway, try to check all this information, and you're also going to find the charts of the cross pair that is the opportunity based on that specific day. Okay, so it's just a quick introduction, and then the chart, and then the projection of the prices with that specific information. Okay, so again, you go to articles on the website, and articles are going to talk about the opportunities on something that I see as the best cross pair or the best instrument, so you can get that. And here you have plenty of charts, and I give you all the market intervals that you can actually trade with. And of course, this is from Sunday, and now it's quite different, the situation, and we're going to talk about it now. Okay, so the last lesson we spoke about the confirmation prices, no confirmation prices, that you as intraday trader, you're going to sometimes trade with confirmations and sometimes trade without confirmation. So if you have any question regarding the last lesson, this is the moment for you to actually do those, make those questions. And if not, we can keep on the next subject. Again, this is based on the book Price Action for All. You can actually get it from the website. You go here at the book, the third tab, and you're going to find the English version, which is the first version, and it's everything about price action. Of course, what matters here is that you grab the theory of price action, but then you follow these lessons that we are opening here in our YouTube channel. So then you can read and go with the lessons, read a little bit more and go with the lessons that we record. Okay, because it's it's theory, and at the end of the day, what you need is actually to know how to apply it in the markets, and that's at least my goal. But I wrote it so you have this structure of price action, but not necessarily you're going to be understanding and actually trading at the same time with the same knowledge every day, because many days are actually more based on the experience that you have reading the highs, the lows, transition levels and such. So it's highly recommended. Get the book and then follow the lessons here on the YouTube channel. Again, this is the lesson number 9. Previous lesson and everything is in the YouTube channel. Let me show you where you can find the playlist. We also have on Instagram another lesson that it was in between the 7 and the 8 lesson. So you're also going to find interesting the material that we have in our Instagram. Let me show you really quick. Where can you find the other lessons for the book? Of course, you're free to contact me if you have any questions, because it's the idea again is that you can apply it right away. Most people that they find watchmytrade.com, they are already trading the markets, and they have all kinds of trades, floating trades. So you ask me, how can I sort this out with the price action? And you can totally do it. So if you are let me show you here first. So this is our YouTube channel here, and it's going to be on playlist. You're going to find the here price action for all lessons, and this is a playlist, and you have all different lessons here, so you can study from each one. Okay, and everything is related to the book. Okay, so the question, can you understand the lessons without having the book? I'm sure you can. I'm sure you can. But the idea is to follow what is written, so you can study from the book and then support the information with these lessons. But it's up to you. Okay, so I'm going to go to the last subject that we spoke on the last lesson, and let me show you here. Okay, so it's not a big book, but it's just what I try is to summarize as much as possible, but without being too general with the information. It's a lot, Price action is very simple, but at the same time, when you have to use it, when you have to apply it, it takes a lot of skills. That many times those skills are gained with experience and not necessarily from studying anything. Okay, but I'm sure that you know that you understand that how that works. Okay, so I'm going to go to page number 46, which is price identification, and we're going to talk about how you finally get to identify buy prices, sell prices, and all of that. And we talk about, well, all these topics already. Candlesticks is not actually something that we talk too much about it, but it's only for you to know how to support the prices and the entries and everything using the candles. That's all what you need for. You don't need them for studying the patterns or studying anything from them, but it's just to shape out how you actually going to trade the market with the candles, but not because it's going to give you exactly where to buy, where to sell. That part, where to buy, where to sell, and how to identify prices, is on page number 46. So we're going to go right to that point, 46. And because it's always a question. I trade live every day, and I also have live trading session with all traders join for the U.S. market opening hours. So we trade the U.S. opening hours, and when I start doing my analysis and people watch my trades and everything, I don't have enough time to explain how do I see the buy levels, how do I see the sell levels, how do I see the buy prices, how do I see the sell prices. So for me, this is the moment where I can really show you and give you the structure and how you actually get to read those levels, those very important pieces of information. What are the buy prices, what are the sell prices, what's more convenient for you sometimes to wait for the buy levels, to wait for the sell levels, because many times it's going to happen to you that you're going to have buy prices, but those are the highs of the week, of the month, of the year. Then it's not going to be convenient for you to actually buy, and instead you're going to wait for the seller. The same for the low levels. We're going to have many sell prices, but those sell prices on the intraday basis maybe are the levels that the market was actually into the buyers on that week, on that month, on that year. Okay, so that that can happen. So and then it's convenient for us to wait for the buyer instead of taking sell prices. You see, so you're gonna have a lot of that on the intraday basis. But here we're going to talk about how you identify finally those prices. Okay. So, and I propose here an exercise, so for example, just grab the euro dollar and draw price lines, just draw price lines on the prices that I mentioned on the map price. Okay, so I have, for example, the map price, the 118 level, the 120 level, the 121 level. And the idea is that you set up those lines and see in the past how the market reacted into those prices. because at the end, that's all what price action is. At the end, that's all what price action is to being able to identify when in the past the market actually got to buy in certain levels, where the market were actually taking profit from certain levels, and that gives you the offer and demand situation at any certain level of the markets. Okay, and also applies for commodities, applies for anything you want, for cryptocurrency if you like, anything. Okay, so that's the first thing you have to actually do. Grab your platform, grab your charts, and set up the lines of the map price, and see how the market actually behaves in the past. So for example, you grab the 2021 euro dollar, 2021 pound dollar, dollar Canadian, gold, and silver. And you grab those price lines into, for example, 118 on the euro, 120, 117.50, and then you see in the past, like for example, 5 years back, the market touching the 118, touching the 119, touching the 117.50, and how was the market reaction on those levels? Did the market went and bought into those levels, or did the market took the profit out of the euro or the pound or whatever cross pair we're talking about? So you're gonna realize, when the market is actually jumping in the buyers at certain prices, and when the market is actually taking profits on certain levels. Okay, and again, this is a great exercise, and you're going to start realizing what I'm trying to say here is actually how the market behaves on certain levels, and that's the basics of price action. Okay, so I'm going to go to markets now right now, and I'm going to show you what I'm trying to explain here. So this is the exercise, how to identify levels. And then on the page number 46, what I try to do here is to write the internal conversation that you need to have when you are, facing the intraday trading situation, the intraday trading. So my proposal here is, so you ask yourself the right questions before you jump in the market, before you sell, before you buy. Because internal questions, your inner conversation when you trade is the most important setup. It's the most important setup before you do anything. Okay, so that's the little proposal that I give you on page number 46. What questions do you have to do to ask yourself before you do anything in the market? Okay. Then I don't see the page number, but it's 47 right here, and 48. Well, that's the first part, how you do it, and the second part is also about questions. Again, all about questions and your inner questions. What risk? How much money you're gonna put into in certain trades, if you can add more lots into that trade, and when you can add more risk into the trade, when you shouldn't add more risk into that trade. Okay, because many of you, I know that you want to start trading and investing with $1,000, $2,000, $3,000, and which is okay, because I understand that you don't want to take as much risk, because you don't know this market, and you don't feel confident enough to trade price action because it's a little bit new for you. But you have to understand that also you have to deal with volatility, and dealing with volatility with a low investment, it can be a little bit tricky. So at this point, you should know that working with $1,000, $2,000 investment in the FX market and commodity market is kind of, you're going to be exposing yourself a little bit too much probably. So make sure that you understand the lots size, volatility on the intraday. So starting with simulator before you jump in real investments, that's always ideal to do that first. Okay, so let's go to the price identification. Again, you just grab the book, you go to these pages, and I want to show you the right the market situation today, so we can start applying the map prices and also understanding how you identify buy levels and sell levels with the real market situation. Okay, so for example, we have here euro dollar, and I'm sure that if you went through the previous lessons, you already know the map price in the euro dollar in this area. But if you don't, I'm going to help you out to set up for you. Okay, so for example, we have here the actual price in the market is the 118.27 at this moment, and I'm going to set up the major and the most important psychological prices in the area, and then from that point, I'm going to go back and show you the buyer and the seller from these levels and how the market replicate the same situation even 2 years back, 5 years back, 8 years back, 10 years back. Even though we are in the pandemic situation, which is very unusual, but still, it responds to the same way. And that's the beauty of price action, that you can trust price action, from here to within the next 1 year, 2 years, 3 years, 5 years. It has to behave exactly the same. Okay, so I'm going to put a line here at, for example, 118. I'm going to go for 118 here on the euro dollar, and then I'm going to put another line at 118.50, and then another one at 119 here with the euro dollar. And I'm going to remove all these lines down here, so we have only the more important levels that we have to study, at least on the euro dollar, within these days, of course. Okay, so 118, and down here I have the 117.50, which is a very nice and very important price also for the buyer, right? So 117.50, 118, 118.50, 119, and then I have 119.50 here. Okay, so this is basically the map price in the area as today, July 27th. Okay, so the question today when we were trading the euro is that, are we buying above the 118? Are we selling at 118? And yes, we knew that above 118, the market was actually into the buyers. We knew that the 118, it was a buy level up to 118.20 and 118.30. But we decided today not to take those levels to buy, because actually the euro was not showing that much of the interest buying at the 118, and that happened for the last few trading sessions. So let me show you here what I'm trying to say. So I don't know if you follow me here on the chart, but you're going to notice that the market is actually touching the 118, but not really pushing through it, So that's what happened for the last few trading sessions on the euro. Again, if you understand the map price, you know the 118, if you have a buy day, it's actually a price that you want to take for the buyer. Okay, but it's been touching the 118 and not doing much through it, just touching the 118 and actually dropping. 118 and dropping, 118 and dropping, 118 and dropping, okay? So finally today, the market made it through the 118 and reaching finally the 118.30. Okay. So again, if you have a buy opening day, the market touches the 118, you can buy up to 118.20, 118.30. But you had to also consider your recent market activity. And the recent market activity in the past was actually telling us that the 118, it was not strong enough. It wasn't a price that we could actually trust too much. So, finally today made it through it. But previous training sessions, we were actually ignoring the 118 completely. So now, what follows here for the euro? Well, pretty simple. The market is already testing again the 1830, and it's actually 118.30. So the next level is the 118.50. 118.50. Okay, so in the past, one more time, 118 is the buy price, and then we got 118.30, and through 118.30 we can buy again up to 118.50. And you don't need indicators to set up this type of strategy and to set up anything. You already know. You already know the 118, 1830, 1850. Okay. Then what's going to happen after this? Well, of course, that if you made it through 1850, it's going to reach the 119. Okay, so this is the next level. From 119, we're going to stop because that's a very important level for the market to take profits out of the euro. So we had to make sure that if we're going to buy again above the 119, we get the confirmation. So check the previous lesson about confirmation prices, and yet we need the confirmation above the 118 if we're going to buy again. And of course, the targets are 119.30 and 119.50 on the euro dollar. Okay. So again, this is one of the first trading sessions. The euro is actually closing for the buyers and holding and stuff. So this, that's good. So we'll see what's going to happen tomorrow. Let me show you the pound, which it was pretty unusual what happened, the pound dollar today. But we changed the strategy here. We were actually into the sellers on the pound dollar, but again, 100% buyers, and we just closed the buys on the pound dollar. Okay, so we decided to hold buys, and at this moment, we have the pound dollar below 139. So what we have to do is to wait above 139 and to see if we can buy again up to 39.50. Okay, it's very simple. The market is closing for the buyers on the pound. We wait for 139, and the next level is the 139.50. I know there's going to happen many targets in between, but the market is really gaining buy power on the pound dollar. So most likely we're going to hold it all together. We're going to hold it all the way up from 139 up to 139.50 over the pound dollar non-stop, because we don't have to close it into any previous target. I don't see that necessary. It can gain all the power to just reach again 39.50. So let's verify the market prices on the pound dollar now comparing to the past. So if we're talking about possible sellers, or maybe just all the buyers back above the 139. So I'm going to go back, and then I see here, I don't know if you follow me on July 12th here, July 9, July 12, and July 13. I have these levels on the pound dollar as the very important highs, and those levels are 139. So I can say that in the past, the 139, it was actually a level that the market was taking profits out of the pound and not really buying. So again, when you're facing psychological prices like this, you need the confirmation. You need the market first to close above the 39, and then you can jump in and buy again. So don't take for granted that whenever the market reaches a psychological price, it's going to gain buy pressure or sell pressure. You see, that's what I'm trying to explain every single time we get in the market. Don't assume anything, just wait for confirmations. When you need the confirmation, sometimes you cannot wait for the confirmation because you're gonna miss the opportunity. Okay, so we can see the pound dollar, the 139 in the past, and July it was a take profit level. Again, if tomorrow we have the market above 39 with the confirmation and everything, then we're gonna buy. So 139.10, 139.20, 139.50. Let me check more the pound dollar in the area. So yeah, 139, and I have here in June as the levels that the market was actually buying. So in June, the market was buying on the pound dollar above the 139, towards the 39.30 and 39.50. And then June 22nd, June 23rd, June 24th, we got the pound almost at the 140 level. Okay, so it can behave as both. We notice that at the highs of July, we also can see that those levels in June were very easily, the market made it through it and everything. So just, on these days on the pound dollar, be very careful because we might have both type of situations. My suggestion is always the same. Scalp the area is always better than to just have the risk and wait for the final target. So what we're going to do is that scalp it like this. So 39 to 39.10, and then through 39.10 towards the 39.20, and then 139.30. So this is the way you scalp the area instead of risking in one shot altogether, waiting for the final target of 39.50, because it's a very mixed level. Very mixed level. We have the highs of July on these levels, and also we have buy pressure in June on these same levels. So we'll see what's going to bring us tomorrow the market on the pound, but yet it's very mixed, very, very mixed. And here we go for dollar yen. Again, the question is price identification. How you know that you are into sellers, how you know you are into the buyers. So dollar yen at this moment, of course, is 100% into the sellers. So we are at the 109.64, and the answer is below 110. The strategy for dollar yen, it is 100% for the seller. Below 110, the strategy for dollar yen is 100% into the seller. Below 110, sellers only. So the strategy is just sellers and sellers, and whenever the market touches the 109.60, it's going to reach the 109.50. But at this point, we already got to sell down here, and we already actually close it. And let me show you, because everything I do, I actually I type in all my trades for the trader follow me on my live trading sessions, and you can join me here too. So this is the last one that we did, and we close it. This is the pound dollar happy face, because we did a pretty good buy by transactions today, and that was amazing. I mean, because I suggest certain targets, pretty aggressive, so it was good. But yeah, again, we already we closed the sale, and we had another sale, so today it was everything into sellers with the dollar yen, because we were trading only below the 110. So maybe we're gonna sell again. I'm not sure, but I have to wait for more information to see if we can actually do the next sale. And this is one of the things that I also wanted to show you. Many times you're going to have sale prices and targets that you will understand, but maybe it's more convenient for you to actually wait for the opposite market, And that's what I'm looking for, the possible dollar yen, that now we might be able to wait for the buyer instead of keep selling. And let me show you why. I'm going to go for 4-hour time frame. And if you see the information here in July, July 8th, we have here July 14th. This is July the 20th. So I see the market is actually trying to push the dollar yen for the buyers down these levels. So I don't think it's more convenient to sell anymore. Dollar yen instead of selling, what we're gonna do, we're gonna wait for the 109.50, the 109.40, 109.30. We're gonna wait for all these levels for possible buyers. You see, so again, I don't have to go to 3 years back or 2 years back, because we have enough information from this current month of July. And at this point, again, we got to sell the best possible sale trades in dollar yen, but not anymore. At this moment, I'm going to wait for the buyer. I'm going to wait for the buyer between the 109.50 and the 109.30. So again, many times it's going to happen that you will see the price, you will see the target, you will understand price action perfectly, but that's when your experience comes in, and you will know, what, maybe I'm just not going to sell anymore. And if it goes down to the next low of July or whatever, I'm going to wait for the buyer and I'm going to buy. So this is dollar yen situation right now. Okay, so let me take you here to the dollar Canadian really quick. Well, here dollar Canadian, we have only it's kind of into consolidation situation. The dollar Canadian, we are into only sell strategy here, only sell strategy for the dollar Canadian. But as you can notice, it's kind of stuck in the area for the last, I'm going to say 1, 2, 3, 4 trading sessions. The dollar Canadian is just doing the same market intervals, not changing anything at all, and just pretty stuck in the area. But it doesn't matter because we know that dollar Canadian is actually touching the highs and dropping, touching highs and dropping. So we're not going to change the strategy. We are only into the sellers with the dollar Canadian, and we're going to keep on the sell strategy only, because that's what I see. The market is touching the 26 and pulling back, touching 25.90 and getting back, touching 25.95 and getting back. So of course, just the seller. And if I see, July 16th, July the 9th here on dollar Canadian highs and then dropping, and then I see all these highs and then dropping. So we can only consider the sellers, and it's all the way down here. But again, some days we have consolidation days, and it might be a little bit confusing, but it's not. Just keep the perspective that if the market is not pushing new highs on the daily trading sessions and it's only touching the highs but then dropping, then it means the market is not betting on the dollar anymore. So instead of going for the buy strategy with the dollar, instead you want to go for the sell strategy with the dollar. And that's what we have at this moment. Sell strategy with the dollar Canadian. Okay. That's all we can say. This little area is not telling us much, but the only thing it's telling us is just don't go for the buyer, wait for the seller. So that's exactly what we're going to do. Let me show you here the dollar Swiss franc, because we have a kind of similar situation with the dollar yen. We had the price going down, we had the price dropping and everything. But then today I said, you know what, we shouldn't sell anymore on the Swiss franc. We should wait for the buyer. And, it can actually drop even more. But I see very important lows in the area. So if you see here, July 9th, July 12th, July 15th, is the market really trying to buy down here, really making a huge effort to buy. Of course, not now, but because it is closing the markets and we are below 91.40 and everything. Most likely tomorrow, if we get the price above 91.50 on the dollar Swiss franc, we're going to go for the buyer. Okay, so this is the very nice and perfect examples that sometimes you have the sell price, the target of your sell price, but it's not convenient for you to take it because you might get stuck with a sale in a monthly low or in a yearly low. You may have the same situation on a year low, So you don't want to go through that. So again, when you have lows like this, you rather not go for the sale and wait for the buyer. Same situation, dollar yen, same situation here for dollar Swiss franc. Okay, instead of selling, wait for the buyers, because again, you see that in the past, you got the market really pushing the prices up on these two. Okay, so now it's easy because we have information on this on the same month. Don't forget that many times it's going to happen to you that you're going to have yearly lows, yearly highs, monthly lows, monthly highs, and you need to go back as far as you have to in order to get that information from the markets. Okay, so the question you had to ask yourself is, okay, I do have a sell price. I know my target. But is it convenient for me to go for those 10 or 15 pips to sell or to buy, having the risk that it's not going to reach my target, and then I might get stuck on those year lows, on those high lows, on those yearly highs? It can happen, it can totally happen. So that's when you have to gain perspective and not try to catch everything you see in the market. Many times you need just to wait for the opposite market to show up. Because I don't see buyers on dollar yen and I don't see buyers on dollar Swiss franc. But maybe tomorrow if the opening is for the buy into the dollar, then yes, we're going to have the buyers jumping in. It's highly possible. But if that happens, then we don't have any sell. And we have 100% buy strategy. But again, that has to happen tomorrow, not today. Okay. Let's see what else I have. Well, we can also give the same example with commodities. And I'm going to show you gold right now because it's actually pretty confusing for the last trading sessions. And if you see here, gold is actually also, kind of tight in terms of what it's doing. So we have 1800 here, and then we have 1808, and then we have the 1810 here. It's pretty easy to see what the market is doing. They're buying at the 1800 and they're closing around the 1805, 1808, 1810. So they buy down here, closing here, buying here, closing here, buying here, closing here. And then we have some deep levels many times, but did not change the strategy for us. So we actually did not go to sell anything on gold. We never did a sales strategy with gold because I knew that the 1800 was actually pretty close, and that level is for the market to buy. Okay, but again, it's doing very important highs. So the 1808, 1808, 1810, 1808, 1810, those are the highs with gold. The question is, when is it going to get through this, through these two highs, and finally we're going to see it at 1815 and 1820, because that's exactly what we're expecting from gold and what it should happen. But it's not happening now. I wouldn't have that situation right now. Okay, but one thing is certain: we're not selling. We're not selling gold. We're waiting to buy at the dips and to close the buys at the 1808, and that's it. Is it going to get through the 1808? Yes. When that's going to happen? We don't know. But very easy to understand gold. For the last few trading sessions, the market's been doing exactly the same. Once it gets through the 1808, 1810, we're going to see it at 1815 and 1820. Those are the next highs, the next take profit prices. You see, when the market within the next few trading sessions break through those targets of the 108, the 1808 and the 1805, then yes, we're going to see 1815 and 1820. But so far, that's all we see. That's all we got, So, and again, we did not have to go too far back to notice this. But if you go like 2 years back, 3 years back, you're going to see the 1800 again as the major and most important buy level for gold. Okay, so we don't sell at the 1800, we buy at the 1800. Just make sure that you use the most recent information to know your targets, to know where do you have to close those buy transactions. So again, all this information of map prices is on the book on map prices. What levels are buy prices, what levels are sell prices. But the easy way is to just gather information from the recent activity. Hopefully you're gonna study enough this information, and whenever you have those yearly highs or yearly lows, you're gonna be prepared. You're gonna be ready to, you know, to kind of, you know, try to manage the best possible way, you know, this information, this situation, you know, because it happened to us many times in the past. Though we had lows of 5 years, 8 years, 10 years, and it's like trading absolutely blind because we don't know. We don't have the offer and demand. We don't have when the market is buying, when the market is actually selling. You know, so many times, and it can happen to you as well. In the, you know, in some moments, you know, you're gonna have those levels that you don't know. You know, that you don't know. So again, it's like so many times the market shapes itself over time, and you have to go along with that information as well. Many times you can have recent information, recent activity that is going to be much easier for you to just buy and sell. And pandemic moments are actually shaped many prices that we never saw before. Never saw before. If you see the 2020, 21 information in the past, 20, and then of course those prices we never seen them before. But again, we go along the market, and if we never saw those sell prices or those buy prices, we jump in anyway. We took advantage from it, but yet it was a complicated situation because we didn't have any reference. You know, it might happen. Hopefully, pandemic is going to be over, you know, anytime now. But if it doesn't, we still know, we still have to, you know, be prepared for those unknown situations. Okay, so well, just a quick insight of everything. Again, you're gonna find this information on the book and the playlist that we give to you. You can follow all these playlists with different lessons: map price, scalping techniques, confirmation prices, equilibrium price, all of it. This was how to identify prices. Again, you follow the map price, and you can go to the to the information in the past, and then you know how the market reacted into certain levels. If reacted for the buyer, if reacted for the seller. Okay, so that's at least the whole point of price action. Okay, guys, I'm gonna leave you this information again on our YouTube channel so you can study from it, and you can get the book to actually read the topics first, and then you go to the lessons. That's the most ideal situation. Okay, thanks so much. If you have any questions, please, you can contact me, or you can just type, use the comments for questions. And I have many traders that follow my channel, and everything we do, they can also help you out. So feel free to comment on this video. I'll see you then next week. The next lesson, hopefully it will be about pivot points. And, you know, we talked about pivot points already, but let me see, let me double check here. We can talk about market pressure too, but this is a topic that you can totally read it, no problem. Market pressure, yeah, it's very interesting topic, market pressure, open interest too. So I'm gonna mention that, and also pivots. So page 55, pivot points for next the next lesson, next week. Thanks so much. I'll see you on the channel for sure. Bye bye.